Hello everyone, welcome to my channel Eco Mystery. Hope everyone is fine and safe. So in the today's class we will discuss about profit and loss account. What is a profit and loss account statement, why it is required to prepare this particular statement, and what is the purpose behind that. So as we know that in the trading account, through trading account we are able to know what is gross profit, right? In the trading account we can disclose only those income and expenses which is primarily related to the main operating business, right? But we also know that while doing the business, there are a lot of expenses or income that we have to incur or receive, right? Like any traveling expenses, any marketing expenses, any CSR expenses, any provision we have to recognize, any depreciation, right? And for the income, there are another incomes like commission received, any other interest income. So there are a lot of expenses or income that we have to disclose, right? So profit and loss account statement is the appropriate statement where we can show these types of the income and expenses which is not directly related to the operating business, but we have incurred or you receive during the operation of the business, and it helps the management to know about the profitability, what is the actual profitability of the business, and on that basis they will able to take a decision whether they have to expand the business further. Okay. And so in the profit and loss account we can calculate the net profit, because in the trading account we can calculate the gross profit. Gross profit means what is actually we have earned through sale of the goods or providing the services. Okay. And but in the profit and loss account we can calculate the net profit, which is calculated by gross profit, a reduction of the expenses and addition of the other incomes. Okay. Let's understand with few examples. So in this example, they have given the gross profit amount of 90,000, and there are certain expenses like salary, rent, advertisement which they have incurred, and there is another income that they have received, commission received of 5,000. It means whatever the expenses they have incurred, we have to reduce from the gross profit, and commission received of 5,000 we have to add, right? It will increase the gross, it will increase in the net profit. So you have two options for calculating the net profit. Either you can calculate through formula, or either you can prepare the T account. Okay. And in while preparing the T account, whatever the gross profit you have, it should be going to the credit side. Whatever the other income we have, it should also visible disclose in the credit side, and whatever the expenses we have incurred, it should be visible or disclose in the debit side, because we also learnt while doing the journal entries, whatever the expenses we have incurred, it should be debited, and whatever the incomes we have, it should be credited. Okay. On the same basis the T account should be prepared. Next question is, it is similarly very similar to the previous example only, but there is a one adjustment that we have to learn. So in the given information they have said that rent paid 18,000. It means here you can find only figures which was actually paid in cash or through bank, but there is a rent outstanding of 3,000. It means for what will be the journal entry for rent outstanding, rent expense to rent payable. Okay. It means by 3,000 their rent expense will be increased, and it will be 21,000 from 18,000. Okay. So while preparing the profit and loss account, we have to consider the rent expense of 21,000 instead of 18,000. Okay. And on the similar basis, gross profit of 1,20,000 should be come in the credit side, interest received of 4,000 should be come in the credit side, and whatever the expenses they have incurred, it should be visible or disclosed in the debit side, and by through we are able to balancing figure will be your gross profit. Okay. This is a third question where we have to prepare a cumulative or consolidated trading account with the profit and loss account. Okay. So first of all, we'll think about we will prepare the trading account, and after that we will prepare the profit and loss account. Okay. So this is the opening stock of 40,000 which will be will be visible under the debit side. There is a purchases of 2,50,000. Okay. And sale 3,20,000. So purchase should be visible here in the debit side, and sale should be visible in the credit side. Okay. So return inward 8,000. It should be reduce your sale return. Okay. So net sale will be 3,12,000, and return outward 6,000. It should be reduce your purchases. So net purchases is 2,44,000. Okay. Wages should also be a part of the trading account. So they have given one adjustment for the wages. Outstanding wages 5,000. So it means net wages will be 35,000. Okay. So that you have to consider in the trading account. Carriage inward 12,000 you have to consider. Okay. Salary will be a part of profit and loss account. Rent also a profit and loss account. Advertisement will also go to the profit and loss account. Office expenses will also go to the profit and loss account. Now the question is discount received. It's where you have to disclose. So it should be a part of the profit and loss account only, because it is not a direct income, right? It is an indirect income that we have received. Okay. Next is commission received. It also has a profit and loss account. Okay. So this is a trading account that we have to prepare. Okay. And through this gross profit we can transfer to the profit and loss account, and accordingly we can compute the net profit. But there is a one adjustment for the rent expense for 24,000. They have given that they have paid the rent in advance of 4,000. It means out of 24,000, 4,000 pertains to the next year. So net rent expense will be 25,000. Okay, 20,000. Sorry. So, and we already in the previous class, like in the first, second, third class, I think we've already discussed about what is outstanding and what is prepaid. So prepaid is whenever you have paid any amount in advance for any expenses or for any services that you have to consider in the next financial year. Okay, because whenever we are maintaining any books of accounts, we have to consider only those expenses which pertains to that particular financial year or current financial year. Okay, I hope everyone is able to understand the concept. Let's try more and more questions, then you are able to enhance your understanding. Thanks. Have a good day. Bye.